In this video, we're going to talk about the Bollinger Band and Stochastics reversal trading strategy. Stay tuned. Hey traders, a very warm welcome to you. This is a good one. This is a nice strategy. I've been digging around the internet looking for strategies to share with you guys so we can drill down into them, look at the pros, look at the cons, how we can kind of maybe use these, integrate them into your own trading, or literally use them as a foundation to build off. So this strategy, I like it. There are some downsides, but as there are all with any strategies, let's get down into it. Okay, so this is a, well, it was not marketed, it was claimed to be a swing trading strategy, but I've looked at it a little bit closer and we'll go into some kind of day trading stuff with it at the end of the video, so stay tuned for that. Let's look at the criteria for it, let's explain it, let's look at the pros and cons of it. So the idea is using a Bollinger Band here, and the settings they request you use are 20 period, standard deviation of 2, so your normal standard settings for Bollinger Band. Stochastics, they're saying use a 1355 setting. I think you can probably, adjust that to and fro, but the point is you want it a little bit smooth, you don't want it too quick, and you'll see why in a second. So the criteria are this. Number one, the price must be touching or be above the upper Bollinger Band. This is for shorts, by the way, and we'll flip it for long. So touching or above the upper Bollinger Band. Number two, stochastics must be in an overbought condition. Overbought means that both lines should be above 80. So price above or touching the upper bolly, stochastics above 80, overbought condition. Flip it for going long, and that will be price below the lower Bollinger Band or touching the lower Bollinger Band, and stochastics in an oversold condition. And you might have guessed it already, we're looking to find a reversal in the market. We're not looking, this is not a momentum play, this is a kind of exhaustion play. Price has run up, it's got it really puffed out, it's now overbought. There's a last little gasp above the Bollinger Band, and we're looking to find a place to short it. Now, one thing I've missed out, guys, is the third criteria for this, which is pretty much why I like it, is you must have a reversal candle at that point. So not only do you have to be above the bolly or at the bolly, top bolly, you also have to have the overbought condition, and you also have to have a reversal candle. So you're going to have that tail, that hanging man, that kind of hammer, whichever side we're looking at. You know the score. If you're not sure about the candlestick patterns, go and check out some previous videos I've done on candlestick patterns. But we're kind of looking for that, the push above that fails. So that just big wick that I like to call it, or that big tail to the downside. Just something indicating an sort of intraday change of sentiment. Nice, I like it. I like it already. I'm thinking about it. Okay, I've got an Australian dollar, US dollar chart up here. I'm flicking around between the different currency pairs. To be honest, it's a reasonably frequently occurring setup. However, you don't very often get the overbought or oversold condition, which is good, because any strategy for me that filters out all the rubbish stuff gets a thumbs up from me, guys, because I like to see that. I want to take the cream of the crop consistently. I don't want to take substandard stuff, and it makes sense. Overbought and above the bolly, good to go. So here we've got a great example of one here, guys and girls. We're above the top bolly, and either of these candles are pretty much going to go for it. They're both giving you the same kind of signal. They're both saying, hey, we're above the upper bolly, we're overbought, and we're putting a topping pattern. So you're going short here, and with a kind of a lot of these things, they say, yeah, they're a bit vague with the stops and the limits, and that's fine. That works for me, because it probably works for you as well, because then you can tailor it and adjust it to suit you. If everyone out there is doing exactly the same thing, using their stops at exactly the same level, it's no good. You want to tailor it to adjust perhaps what you expect the price to do, number one, perhaps how much risk you want to take, number two. The stop at the end of the day always goes in a place that would negate the strategy. So for me, the obvious place is going to be a few ticks or a few pips, whatever you're trading, above the high if we're going short here of the candle. It just makes sense. Otherwise, if it's breaking above it, it's negated the strategy, the setup. So we're going short here, and do you know what? I think the target is whatever you fancy. I mean, obviously in this one we've got multiple times our risk on it. I think a sensible place is, if we've got a sensible head on here, which we should do when we're analysing these kind of things, the mean of the Bollinger Band, the lower Bollinger Band, very sensible kind of idea. If you've got a longer term thesis, maybe you scale off 1 or 2 chunks of the trade at the mean and the lower Bolly, drag your stop up. In fact, you probably would have got pinged here, wouldn't you, if you did that? But this is just for this example. If you're on the end of a really good one that's kind of really running and trail the thing. At the end of the day, don't forget, guys, the premise of this trade is that we're looking for a reversal. You've got the overbought condition, the flush, the exhaustion, and the candlestick pattern to get in. You could end up with a real gem of a trade that gets you in at day 1 or day 2 of a big trend reversal. And I can think back in my head just of big trend reversals we've had on multiple different charts that this probably would have fired off. And if you're looking for that already, but you're looking for the catalyst and the trigger to get on it, you're in with a kind of a really tight entry and 10, 20, 30, 40, 50 times reward if you've got that in mind. Anyway, let's look at a day trading perspective. I like my kind of intraday trading stuff, and I just thought, let's have a look at some stocks, because I just got to thinking this would work quite well with stocks and indices. I had a look on, you've got to be careful with stocks actually. If you're using kind of a 4-hour type of chart, that those gaps that you get from the close to the open don't screw up the Bollinger Band, because often you get that gap, it's going to mess up the Bollinger Band and your criteria. So you got to be a little bit careful about that. So anyway, I stuck quite a few things actually, and we just picked out Facebook here on a 5-minute chart, thinking, okay, could you kind of use it as a scalping strategy intraday on stocks? And the answer is yeah, you could. And if you look here at some of the triggers we've had, the Bollinger Band tag below, oversold condition. Here you've got this bullish reversal. That's worked out very nice. You've got another one here, which is actually the one, really the best one, but you've also got to take every into account. This is the nicest one, I think, the cleanest one, because it's not only is it, if we're being extra clever here, which we may as well be, below the low, so it's like a double bottom type criteria. It's below the Bolly, check. It's oversold, check, and it's got a beautiful, beautiful reversal candle on that 5-minute candle there. Your stop would be going just, oops, my pen has gone, let me get it back. But your stop will be going just below the low, makes sense as well, and your target's going to be whatever you want it to be, the close, the mean, whatever. Maybe you wanted to hold it for a multi-day play, and again, this was the kind of thing that you wanted to get in on. This is the point, guys. This is why it's quite an exciting play. I mean, look at that. If you were, I mean, obviously we're cherry picking a bit for the example, but let's say you were saying, hey, I want to be on Facebook and I'll pull back, I want to get involved in it. Nothing's stopping you using the strategy on a sort of short-term basis, going, yeah, you know what, I've got my risk here, is whatever is that risk. What is that? I mean, approximately, not going to go into too much detail here. It's about a buck, not even, it's like 50 cents worth of risk, whatever, for multiple times my reward. Yes, you're going to get stopped out from time to time, but if you kind of use this strategy as a short-term play to get into something you want to do in a long term, then that's where the big cash can kind of come into play. So I like this strategy, guys. Let me know your thoughts in the comments section below. Your thoughts and the theories and rules on this. Any ideas for tweaking it? Always up for ideas for tweaking strategies, adjusting it. But I like the fact that the overbought or oversold condition, extension away from the standard deviation, i.e. the Bollinger Band, and the little cream on the little cherry on the top for me is that price action candle, which I love that kind of stuff anyway. So yeah, give it a thumbs up, guys, if you like this video. I think it's a nice strategy, and don't forget to subscribe if you haven't already for more kind of strategy drill downs, talks from me and other traders on this channel. Most importantly, good trading. Take care. See you in the next one. Bye bye.